Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And the market has a little bit of a rough week. So we're going to take a look at some very interesting charts above the 200 moving average. And we're going to see, is this a dip or is this a crash? Very scary crash. Which, not scary. It's a better opportunity to buy stocks at a cheaper price. Still hoping NVIDIA crashes here. So before we go on, this is our poll. Boom.
Yeah.
You have three options. I just put this up like last night or this morning. I can't remember. Last night.
11 hours
Um,
ago, apparently.
yeah.
We
Boom.
got 98 responses in 11 hours, dude. We're almost Mr. Beast sized. Okay.
If we would have had like 100, we would have been Mr. Beast. Right
Yeah.
there. We're so
Totally.
close. Darn it. Um, so you have your buy the dip. We will recover soon. You have brace yourself. Cheaper prices on the way, and the matrix is real. So who cares? All right. Those are your three options.
Yeah. Yeah. I voted for brace yourself, FYI, just so you know.
I voted for matrix. Actually, I didn't vote yet. That's I haven't looked at it.
Yeah.
Um,
If you're like the rest of us and like subscribe to a bunch of random financial content all over the internet, this has probably popped up in your feed the last few
yeah.
days. This is one of those like ooh oogity boogity scary things, the red
Yep.
circle and lines. Um, this comes from like Elliott wave analysis, which is a way of like interpreting financial markets using like Fibonacci sequences and I don't know. This is more of like a technical analysis kind of tool. I mean, certainly it looks interesting when we're out there, nigh on the edge of a precipice, if you will. But how much this is like, actually going to predict the future? I don't know. We certainly have a few years there that are very scary to line up with. So sure, pay attention to it. But if you look at the what's gone into this, there's a lot of data there, and I'm not
Cherry
sure,
picked.
if this has ever been backed up by like an actual, kind of economic analysis in order to see if this is accurate prediction tool or if it's just like maybe could be sign. Who knows?
It's one of those where if it crashes, then we'll be like, I told you. Look at it.
Yeah,
And then if it
yeah,
doesn't, like 900 other indicators are like, well, just wait for the next one.
yeah,
But yeah, I've seen this. This has been across my feed like 30 times. So,
yeah.
but we're going to look at more important things here, which is, where's my, hold on. Sorry. There we go.
Mildly
Okay.
scared.
Here's the cues. All right. Now, the two most important moving averages, in my opinion, are the 100 daily and the 200 daily. That is this light blue line and gray dash line. This is the 100. This is the 200. If you follow this channel, I have multiple trades I do based off of bounces off of 200. And then we've also looked back like 30 years in the stock market on sentiment changes as it dips below the 200 and if it sustains. We've done that so many times, so I'm not going to do it this time. But they're important. Let's just go with that, right? Doesn't have to be crazy. You can see heck of a sell-off, okay? But we are still above the 200. SPY, very similar chart, except the sell-off has been mostly tech, and the Qs has no financial stocks in their ETF. So this is holding up a little bit better. All right.
Yeah,
But
that's pretty cool.
here's what I want to show. I've showed this before. This is a very unique time in that 50% of the Qs is held by these 10 stocks. Okay. That's a lot. That's
Sexy.
too many. So what I want to look at is individually how he's doing because it's actually kind of surprising. So this is 9% of the Qs. Okay. We had a little bit of a dip. We did bounce off the 200. We're still above the 100 moving average. I would say this is healthy. Above the 100, doing great. No reason to see a crash incoming. Ooh. All right. NVIDIA. We have dipped below this 200, set a lower high, dipped back below this 200. Not looking awesome. Now, granted, you cannot make a prediction from here. It is a flip of a coin. If everyone says we're going to crash because they're going to pull up some obscure pattern, it works 50% of the time, which
Yeah.
is a coin flip, right? But what matters is how long are we below this? So if we, for instance, hit it and have a big down day, big volume, problem. That is
Okay.
relatively predictive. Okay?
Hey, just get your shopping list ready as far as prices and know when you want to
Oh,
buy NVIDIA
we
because
actually, you know what? We actually should have. That's a video. Yeah, we should do like
yeah.
Microsoft, Amazon. We should do all these just in case. NVIDIA, that was 7.4%. Okay. Microsoft, not having a good time. 7.8% basically. We are well below the 200 and are in a downward trend fairly consistently. We have one support here that actually dipped below at 387.50. So not looking too hot for Microsoft. Okay, 7.8% of the entire Qs. Amazon fell below the 100. Once again, it has respected this pretty well in the past. It'll be interesting to see what happens here as it approaches the 200. I wouldn't say this is healthy. I would say this is chilling. Okay, that's a very technical term.
Yes,
chilling,
like a villain.
Not good. Google 5.88%. We had a heck of a time here. We are now fairly consistently going below the 200, setting lower lows every day. Not good. Another 6% of the Qs. All right. As you can see, you see where this is going. Broadcom. Hopefully we can get to Nancy Pelosi's buy-in price. That'd be great. What is that? 160?
I don't know what her buy-in price was.
It was around there. It was I think it was to the cent she bought in. Perfect as always. But you can see we have respected 200 pretty well here, so it is going to be very interesting to see what happens if this hits, but that's another 4%. Meta's very healthy. Killing it. Doing wonderful. Hate my life. I don't have more. 3.8%.
Absolutely same.
And Costco. You know, I had a bunch of shares at 350. This is a long time ago. This was when I was swing trading more instead of investing. I still swing trade, but I did not look at it as an investment.
Wow.
Made a solid 350 to 400 trade. What an idiot.
Nice.
Tesla at the 200.
Oh.
Yeah. This is the election here. This is the election bump. We are now below the election bump. Yikes.
Wow.
It'll be interesting to see what happens at this 200. So you can't just go by that, even though that is 50% of the Qs. Those, whatever, how many stocks you just looked at? 50% of the ETF. Multiple below the 200 and trending downward. 2 or 3 are healthy. 2 or 3 are risky.
Yeah.
Yeesh.
Hey, you remember that children's nursery rhyme that goes, and the little one said, "Roll over." That's kind of what the whole market looked like.
That'd be great because I got a lot of money on the side. I'm just waiting. Here, let me move my face here. So this is percent of stocks, all stocks, above the 200-day moving average. Okay, you can see we are below the 50 percentile. We're below where we've been in a long time, other than this little blip here. But to be fair, let's zoom out because you need some context. It's actually not insane. Okay, so this is going back 4 years. This is where you go on other YouTube channels who are trying to say there's going to be a crash, which there could be. I don't know. Let's just take in all information. It's not crazy low. Like it's low. It's not crazy low. But the 200 is very specific. It's a very strong average. Okay, this is the 100. This is worse. There is only 39.8% of stocks above the 100. Okay.
It's still not like super worrying to me, at least at that point. If you told me it was like 10%, then I'd be like, oh God.
So the way, once again, this is an opinion that on how to interpret this, but the rule is between like 30 and 15 or something is markets down very bad. This is scary. And then 10 is overbought, means buy. Once again, very general rule. Not a perfect science there. All right. This looks scary. I get it. Let me shrink our faces. I'm going to go over this.
Yeah.
It looks very intimidating. But this is not all stocks. These are ETFs, which I would consider a little bit more reliable. Okay? So these are 100-day moving average, percent above the 100-day moving average, but you have your SP 500, your Dow, your New York Stock Exchange, your NASDAQ, Russell 3000, 2000, yada, yada, all these, okay? So we're actually, 50 percentile, pretty good. 66 percentile for the Dow, which as we've seen, the Dow is outperformed. They're doing pretty well as everyone else is crashing, but that's because there's, 30 stocks?
Yeah, it's only 30 in the Dow, and
Yeah.
they tend to be more like blue chip, profitable companies, a little less volatile. You know,
Yeah. Then you have your 43 for the New York NYSE. NASDAQ is at 32.9%. Real low. That is getting scary. So is the Russell 3000. So is the Russell 2000. They are both in the 30s. Yikes. Very, very iffy. How
yeah,
would you
it's
interpret
pretty.
that?
Especially like we did a separate video about the small cap underperformance over the last several years. So Russell 2000 being so many of them below their 200-day moving average is
That was
even more
100.
startling.
That
Yeah.
was 100. But yeah, I would have
Well,
thought when I was doing this, I was like, I feel like the small cap index will be performing a little bit better, right? And they're not actually.
no.
Yeah. So the theory is you have 50% of the top dogs in the queues. Over half of those are not doing well. And you have all the small caps not doing well.
Mm.
What does that mean?
To me, it means get your shopping list ready.
I agree. 100%. I'm really hoping
But
for NVIDIA 100. That'd be great.
yeah, and that's speaking as someone that's like 20 years away from retirement.
True. That's a yeah. That's a good point. We should be sensitive to that.
Yeah.
Sorry. Okay, guys. Let us know what you think.
Yeah. Catch the next one.